Low-risk trading with Bollinger Bands and RSI Trendline breaks. This is one of the most profitable and reliable setup strategies for scalping, intraday, and swing trading for any markets. As always, this video provides a clear, winning, step-by-step guide to how to successfully trade in the forex, stocks, commodities, or any financial markets and generate consistent profits. So, by the time you finish this video, you'll know exactly when to enter high-probability trade using the Bollinger Bands and RSI indicators. As usual, we'll have plenty of practical examples. The idea is to fully understand this wonderful trading strategy and to make the most out of it. If you want more videos more often, please smash the like button, subscribe, and turn on the notifications bell so that you know exactly when new content is released. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. Bollinger Bands and RSI are very popular indicators. Traders have mastered how they can help market analysis. But before going into the specific discussion, let's take a look at the flashback about the two indicators. Bollinger Bands Overview. Bollinger Bands is a technical indicator that is used to measure volatility and determine the direction of the trend of price movements. This indicator can also be used to find overbought and oversold conditions. The Bollinger Band indicator consists of three lines: upper band, lower band, and middle band. Basically, the middle band is a moving average line, and the upper band and lower band lines are deviation lines from the middle band line. Bollinger Bands lines called the upper and lower bands act like belts for price movement. In a sideways condition, the two bands are quite accurate as oversold and overbought areas. This indicator was created by John Bollinger, a technician trader in 1980. What time frame is best for Bollinger Bands? Actually, choosing a time frame is more related to the trading style by each trader. In trading, we are familiar with scalping strategies, intraday trading, swing trading, and position trading. Scalping trading, which is a short-term trade, is more suitable to use the M15 or M5 timeframe for accurate price details. Intraday traders who open orders in a day are more suitable to use the H1 and H4 timeframes to project daily movements. Swing traders who open orders for more than a day are more likely to use the daily timeframe, but they will also go to a lower timeframe to get the best price. Position traders, these are long-term trades, allow traders to hold orders for a month or two or even longer. This is more suitable with using the weekly timeframe, but also paying attention to the monthly timeframe. The longer the open order, the more margin strength is required for the durability of the account. Do Bollinger Bands actually work? Bollinger Bands work especially well in sideways markets. In this condition, Bollinger Bands form horizontal or flat lines, and price movements often bounce on the upper and lower bands. If you find this condition, the Bollinger Band is good enough to determine to buy or sell by looking at the price of the Bollinger Band. Like its function, to measure volatility, the higher the market volatility, the two bands will expand, while in low market volatility, both bands will be seen to squeeze the price. At an advanced level, the use of Bollinger Bands is developed with a trading strategy called RSI Trendline breaks. What is the Relative Strength Index, or RSI indicator? The Relative Strength Index, or RSI, is a momentum indicator used in technical analysis. RSI measures the speed and magnitude of a security's recent price changes to evaluate overvalued or undervalued conditions in the price of that security. The RSI is displayed as an oscillator, or a line graph, on a scale of 0 to 100. The RSI can do more than point to overbought and oversold securities. It can also indicate securities that may be primed for a trend reversal or corrective pullback in price. It can signal when to buy and sell. Traditionally, an RSI reading of 70 or above indicates an overbought situation. A reading of 30 or below indicates an oversold condition. How to use the RSI indicator. The RSI element consists of three main lines, namely the level 30 line, the level 70 line, and the RSI line. In its application, the RSI uses a scale of 0 to 100, which reflects price conditions on the market. The simplest use of the RSI indicator is to look at the level of the RSI line against the level 30 and level 70 lines. If the RSI line shows above 70, for example at 80, in general, the price has entered overbought. But if the RSI line shows a number below 30, for example, 20, then in general the price is currently entering the oversold area. If the price has entered the overbought and oversold area, it is possible that the trend will end soon, and there will be a reversal. In other practices, RSI users can add the 50 levels which are used to measure the bullish or bearish trend. For more settings, click Properties on the RSI indicator, and on the tab Levels add for level 50. The reading of the trend direction with the 50 RSI level is simple. If the RSI line is below the 50 levels and is pointing downwards, it means the trend is bearish. If the RSI line is above the 50 levels and is pointing upwards, it means that the trend is bullish. RSI overbought or oversold. Generally, when the RSI indicator crosses above 30 on the RSI chart, it is a bullish sign, and when it crosses below 70, it is a bearish sign. Put another way, one can interpret that RSI values of 70 or above indicate that a security is becoming overbought or overvalued. It may be primed for a trend reversal or corrective price pullback. An RSI reading of 30 or below indicates an oversold or undervalued condition. Overbought refers to a security that trades at a price level above its true or intrinsic value. That means that it's priced above where it should be, according to practitioners of either technical analysis or fundamental analysis. Traders who see indications that a security is overbought may expect a price correction or trend reversal. Therefore, they may sell the security. The same idea applies to a security that technical indicators such as the relative strength index highlight as oversold. It can be seen as trading at a lower price than it should. Traders watching for just such an indication might expect a price correction or trend reversal and buy the security. RSI trendline breaks. An overlooked method of using RSI is the use of trend lines directly on the oscillator itself, in much the same way that they are used on price charts. Trend lines are one of the most common and helpful tools in a trader's kit. They are used to show the price upwards, downwards, and sometimes sideways movement. Confirmed trend lines are drawn by connecting a cycle low or high with at least two other of the highest or lowest points on a chart to create a line of best fit. Connecting rising swing lows of the RSI in an uptrend or lower swing highs in a downtrend, traders can find trading opportunities with strong risk to reward setups. Because RSI measures the surge in closing prices, when RSI changes direction and either breaks above or below a trend line, a significant move in price can result. So, we'll use the RSI indicator to show us if the prevailing trend has ended and a new trend is underway. The first step, we're going to measure the overbought or oversold conditions as a crossover system. And then, we're going to take it one step further and look for a break in momentum of the prevailing trend. What I mean by this is that we're going to look at the changes in prices relative to the changes in the peak and the valley that the RSI indicator will generate above the overbought area and below the oversold area. Trend lines placed on this oscillator provide an additional level of precision as well as additional trade setups. Because the signals are leading rather than lagging, stops can be placed relatively close to the entry point. This allows for a good risk to reward trading opportunity. The RSI trendline approach works best on higher timeframes, but it can be used on any time frame, for day trading for example. The base rules of this technique are straightforward. We only need to connect the most recent RSI peaks or valleys with a trend line, and we search for a breakout of the trend line, which will warn us that the market has lost its steam and the prevailing trend has lost its momentum. How to trade the Bollinger Bands and RSI trendline breaks. Now we will get to the point of trading using Bollinger Bands and RSI indicator. Here the buy rules and sell rules using this strategy. Long trading strategy. First, prices falling within a trading range. Second, while the price must tag the lower Bollinger Bands. Third, wait for a bar that closes higher than open. Fourth, open buy will only be done if the RSI oscillator breaks the downtrend line above the 30 levels as an oversold signal. Place a stop loss below the lower band line. Target profit on the middle band is much safer, but you may try target profit when the price approaches the upper band line. Short trading strategy. First, price is rising within a trading range. Second, price must tag the upper Bollinger Band. Third, wait for a bar that closes lower than open. Fourth, open sell will only be done if the RSI oscillator breaks the uptrend line below the 70 levels as an overbought signal. Place a stop loss above the upper band line. Target profit on the middle band is much safer, but you may try target profit when the price approaches the lower band line. This should be simple enough. Or, in this video, I've included a template with the system that you can simply upload to your chart, and it will automatically plot all these indicators perfectly on your charts, so there's nothing for you to worry about. Get the download link on the description. Here are other examples of the Bollinger Bands and RSI Trendline breaks trading. To fully understand this wonderful strategy and to make the most out of it. If the trader has patience, this low-risk trading strategy is a very good and works well in any market conditions. But there is no perfect strategy. This combination of Bollinger Bands and RSI also has its own weaknesses. So, traders must be disciplined in managing their risk. As always, if you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell and leave us a like to show your support. See you next time.